What are the trends in electronic and automated trading in Asia that you observe?
I think there are quite a few things going on at the moment. There's a broad movement from the execution perspective, moving onto the machine, being electronic. That comes not only from an algorithmic perspective, but also from things like regulation in the OTC markets. So we see regulation which will require execution on venues, reporting that has to be delivered electronically, and then also the trade repositories which store the information about the trades. And we also see the movement towards more and more sources of information becoming electronic. So for example, from just market data to economic data, news feeds, and other sources of information are moving into the electronic realm. And then also we see a movement from traditionally financial institutions might have their data center or machine room in their office or in close proximity to their people. That is kind of impractical, as the need for large amounts of data, multiple counterparties, and multiple inputs from different sources. So we see a drive towards this being located in electronic trading hubs, which is what Equinix tries to support.
In light of these developments, can you walk us through the ecosystem model that you have come up with?
So essentially, Equinix builds ecosystems around financial trading and electronic trading, and that consists of all the potential counterparties and types of counterparties in that sphere. That covers the execution venues, covers both the buy and the sell side, covers the market data vendors and other service providers, but also covers the network and technology providers such as cloud. Now, the key thing about the ecosystem is that we bring together the best of breed within those group of providers and counterparties, and allow our clients to make decisions about their service provider based on their own criteria, which could of course change over time. So they may have certain business objectives at this point that can change over time. We facilitate the ease of access to the counterparties that will support those business needs.
How does the growth in data trigger a move towards software as a service solutions and cloud computing solutions?
Cloud computing in particular is a very interesting topic. I think a few years back there was a received wisdom that perhaps financial institutions might have security concerns over putting data in the cloud. But I think that's kind of a false or somewhat of a misunderstanding. Not all data is equal. Some data is very, very sensitive and needs to be controlled very, very carefully. Some data is in the public domain already, and there seems no sense in keeping multiple copies or transporting that data around the globe. So the key thing from a cloud perspective is defining what the security policies are around the data and how it can be used and transported. And to your point, the growth of data, the ever-increasing amount of market data, the ever-increasing amount of economic data that needs to be shipped around, it can become very efficient to put some of that data in the cloud, perhaps using a hybrid model of private and public cloud.
In terms of infrastructure to facilitate electronic trading, is Asia behind or ahead of developed markets?
I think it's difficult to answer that question singly for every market. Each market, again, is different. Clearly there's a lot of investment going on in terms of technology, in terms of the deployment of submarine cables, for example, to connect various markets and to facilitate the transmission of the big data that we've discussed. But in some ways, I think there has been too much focus on the latency issue. We find our clients, although speed is important, it's an important factor for the overall consideration of the trading strategy. It's less about being the fastest and more about trading smarter. We find that our clients come to us for three principal reasons. One is the performance of their IT, which could be speed, but might be cost performance, for example. Secondly is the efficiency. It's how efficiently they can operate the IT and connect to their counterparties, service providers or customers. And then thirdly, it's business agility. So how quickly can you onboard your clients? How quickly can you turn up new services? How quickly can you react to changes in your business strategy or market needs.
David, you observe a trend of investors seeking access to emerging markets, but to what extent is the reverse apparent, that is, Asian traders active in Europe and North America?
Yes, it's certainly been the case that over the last couple of years we've seen a lot of investment from North American and European entities coming into the markets to take advantage of the business opportunity. But we are seeing a number of significant reverse trend indicators. One example I could cite is with the Australian Securities Exchange, who have deployed an access node in our Chicago site. Basically, they wanted to provide access to the liquidity in that environment, and they saw that the greatest and strongest ecosystem for them was within Equinix in Chicago, and hence they chose to invest in that location.